Hey all, Nev here with One Deal Away, and I wanted to do today's video because, if you have been paying any attention to what's happening in the economy, in the markets, with the virus, right, like all around you, I think by this point we're all sort of aware of what's happening, and the COVID has been having a field day, I think, with industries and people all over the place. And so I wanted to talk a little bit about sort of what do we do with our money and kind of what works really well. If you likely have been paying attention to anything that I have been posting and saying, from the videos to the blogs to the Facebook stuff, you likely have and even if you're not following me, you're following somebody else, you likely have realized and you understand that we are down, well into the 30s, 30% plus in the negative as far as the paper assets kind of go. And so I wanted to talk a little bit about sort of what really works well, what does typically well in the crash, in the downside economy. And there's multiple things, and I have already shared some of the stuff, but I really want to focus on two specific things that I think do really well when we are inside the recession, potential depression kind of happening. And recession is not official. It's not going to be official for another 6 months or so, even though I have called it, a lot of people have called it, even Bank of America is calling it. So more and more people are actually talking about it and saying, yeah, we can't officially call it, but that's what it is. Let's be realistic. Let's be honest. Unemployment rate is starting to drop, the GDP is starting to drop, everything is basically grinding to a halt. And most of us are sort of confined into our own homes with the limited ability to go out, inability to go out at all. So, part of it is, of course, figuring out about our health, about our families, about our businesses, if we have any, about our jobs. But I think an important conversation also needs to happen about our wealth and about our money. And so that's kind of what I want to focus on and talk about for folks to be able to sort of figure out the way of how do I preserve some of my wealth or most of my wealth or all of my wealth? How do I do really well? And what are some of the things that I can do? So we've already experienced about 30 some percent downfall, and that's typical for the crashes. Typically the first wave is the sharpest, and then we just kind of slowly trickle down. Now, sometimes what ends up happening is that you will have a market, it will kind of come down, and of course this one has been doing this kind of stuff, right? But the overall trend is downward. Then what ends up happening is sort of hit some sort of bottom-ish. I don't want to call it bottom because it's not a bottom. When that happens, a lot of stimulus ends up coming in, right? And that's basically in a form of liquidity, whether that is from the lower interest rates to money for the banks, to buying of the assets, to the checks to individuals like you and I, and all kinds of different things. That's what this is. When this ends up actually happening a lot, and it's been happening a lot, like every day seems to be another sort of stimulus that is being announced, what ends up happening is that the market kind of goes a little bit up. Now, sometimes it typically doesn't recover all the way to whatever the high was previously, but it will go up to a certain level, right? Maybe halfway up to the top, sometimes, as much as 80% up to the top. So you have this sort of rally. And most of the time it's not a real rally. I mean, it is real when you watch it. It is actually really happening. But it's not real as far as like it's not going to continue going up. That's not going to happen. It will come in, it will hit some sort of top margin piece, and then the news of sort of higher unemployment, more things kind of having to happen, folks realizing that this stimulus, while it's nice to kind of have and it is helpful, is not doing what people have imagined it would do, then it actually goes right back down and it will actually go in even lower. And so some of these things we're already seeing happen where you open up for the trading day and it's kind of going down, there's an announcement, they'll sort of hit some sort of thing, and then it starts kind of going up. And then the following day, what happens? Sometimes it opens the same level, sometimes it opens a little bit higher, but then it ends up going down and typically goes lower to where the previous high was, right? And so that's kind of what happens, just sort of like a bigger picture of kind of what ends up happening. That's what's pretty much happening inside the paper assets. And so if you haven't had a chance to exit and you are sort of thinking of, do I exit now? Do I not exit now? You can potentially try to sort of ride out the wave, see if it can go a little bit higher, and at that point, it would be a really good idea to exit until, let me clear this up, we can get a little bit of space to discuss. Okay, so what you want to see is going to be something like this. It's going to go like this, it's going to come up, it's going to come down, and then what we want to look for is going to be something that looks like this, right? So this is the overall direction. So we'll kind of go in, and you don't want this. You want something that starts to look like this, because this is the healthy sort of, here it is, accumulation, this is the time to actually start coming in, and this is where it becomes a bit more obvious that we've kind of hit the bottom. The second thing you want to look out for is negative news about a particular item, right? So people are right now really talking about this, and they are kind of selling on the market still and saying buy the dip or don't buy the dip, or like wait for it to go a little bit down and then jump in. And so you want to wait for it to go a little bit down. Of course, you don't want to do what a lot of people do. A lot of people kind of end up doing something like this, right? So this is the cycle of the market, okay? It looks something like this. And it goes up, and it comes down, and it sort of stalls, and then it goes up again. And so this is kind of what a lot of people do when they are investing or trading. Smart money buys here and here and here, right? Really smart money buys right around here when they have a confirmation that is going to be going up, okay? The average individual ends up buying here, 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 and here, right? They end up buying at the top and on the way down. You don't want to do that. You don't want to buy at the top, and you don't want to sort of catch it while it's falling. What you want to do is catch it when it's at the bottom, which is sometimes hard to say, which is why I said really smart investors typically watch and wait, sort of, I'm going to wait for it to kind of bottom out, and when I see what they will call confirmation, which is basically like the proof that it is starting to go up, and it's not going to be doing this, it's going to be slowly kind of creeping up. That's the time where it makes sense to buy. And so, when people are really heavily talking about something, typically, not always, but typically, it's too late. The train has already gone up, and it's too late to make mad amounts of money. Most recent example that I can think of is, let's talk about Bitcoin. And I don't have anything against it, but I'm using it as an example. I want to say, what was that, December 2017 maybe? The Bitcoin kind of started doing this, and everybody started talking about it, and it was always on TV, and I mean, you couldn't step away from it because everybody was peddling it so hard, talking about it all the time, and it was doing literally this, because as more people kind of come in, it pushes the price up. A lot of people bought at the top, and then what happened? Well, it went back down, right? It did exactly this, and this is where a lot of people bought. Now, what ends up happening also is that a lot of people will buy over here, and then they're not quite sure how this is going to play out, and they're waiting, buying, and then they sell somewhere around here. They end up selling down at the bottom, which doesn't make sense. You don't want to do that either, right? So that's kind of silly. So that's sort of what typically ends up happening. So when you go out to invest in anything, and I'm using, in this example, I talked about the paper assets, I talked about the crypto, but this goes for every single asset class you can think of. All of the businesses are cyclical, all of the economic seasons are cyclical, our weather seasons are cyclical, so everything in life kind of goes up and down, okay? And so right now we are sort of in this downtrend, and that's okay. That's where we are. Eventually, it's going to sort of bottom out. It's going to get into the low, and then, spring will come and we'll start actually merging out of it. And that happens with everything. It's a normal, natural cycle of, well, the universe. And so what you want to do is you want to buy it on the way up. Now, it's too late for that right now because that's not where we are. We're not in the up piece. We're actually in a down piece for just about everything. But because, there is this sort of the downward trend entering into the recession, or actually we are in recession, just not officially, potential depression, which is basically recession on steroids, what does really well. And I know a lot of people talked about gold, and I am one of the people that also believes that having some gold is good, but it's not necessarily going to do really well in a depression, recession component, because gold, like everything else, actually will kind of go down. It's just a matter of how far down things actually end up going. So when we hit this sort of slowdown in the economy, everything starts slowing down. Every price of every asset will go down. That includes real estate, that includes bonds, that includes gold, that includes crypto. I mean, everything, okay? So, and that's okay, right? So that's that sort of piece where I think everybody's sort of like, where do I go now? Like everywhere I turn, it's, right? Every bridge, every rock, every moat, everything is going down. Some things go down really steeply, some things go down slightly. So just kind of be prepared that that's what's going to happen most likely, okay? None of us have a crystal ball. I definitely don't. I don't know exactly how this is going to play out, but these are the scenarios that, following historical, what has transpired in the past, kind of leads me to believe of what we could potentially expect to see in this particular case scenario. So typically in a recession, cash and the cash equivalents do really well. What are cash equivalents? It's going to be basically high quality bonds. And you might not see it do it really well right this second because everything kind of hits it, but like I said, everything will go down, right? So you'll have, like, say that stocks will do something like this, bonds will do something like this. Let's see how many color markers I actually have to play with. Cryptos might do something like this. And so you have all of these different things that everything will go down. It's just a matter of what percentage points they will go down by. And what you want to do is, reduce how far down you go, because once we actually kind of go into this lull piece right here, okay, it really matters how far down you've gone, because if you experience a drop of, say, 80%, okay, in order to go back up to where your original point was starting, it's going to have to be like 160% or more. So you want to limit how far down your wealth goes over what's happening right now, so that it limits, so that it takes less percentage on the way up, meaning you get here faster. That's really what the end of the game is. Just basic math to, I think, most people understand. Let's wipe this down, clear things up, okay? All right, so we've covered cash and cash equivalents being something that does really well, but they're still paper components. There's a physical component, a physical asset that you can hold, and you have guessed it, that is going to be my favorite asset of all times, and that's going to be income producing real estate. Now, income producing real estate is basically the real estate that brings in income for you, which is why it's called income producing real estate. Simple enough. But it's different than just like a primary residence, okay? Because primary residence, like, well, yes, you have the place to live. There's really no income coming in, okay? And so you can get a little bit creative with some house hacking. A lot of people have been using thing like an Airbnb. However, with the coronavirus, that's really not happening. So if that was your plan of kind of how you're making money, that is part of a problem right now, because that income has dried up. What I have been talking about and recommending, and what I am doing is, long-term rentals, because you get somebody in, they typically tend to stay put, and they just kind of stay there. Now, When it comes to income producing real estate, there are three things you want to pay attention to. Let me put my markers down. Okay, you want to pay attention to a type of real estate, because a lot of times people talk about real estate as like a one thing. It's not, okay? There's a few different real estate components, and I'm being very specific to call it income producing. It has to produce income, and like I've mentioned, you want to go with the long-term rental, okay? Long-term lease. Now, type component when it comes to the physical, you can have the industrial, the office, the medical, blah, 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 right? All these different things. What you want to focus on is residential, medical, okay? Those are the components that will do really well, that are doing pretty okay right now, and will continue to do really well. You can also focus on the sort of like assisted living, or the, I'll call it the sort of like retirement community, because while coronavirus is affecting more baby boomers than it is of any other generation, the rest of the folks are equally as affected. But when I talk about baby boomers are more affected, it's more of like the death rate for them tends to be a bit higher because of the age, because of the additional health challenges that they might have, right? At least that's what I'm getting from the news. I'm not a medical professional, so please don't go by what I am sharing here of kind of how the virus works. I don't know. I'm not going to go and speculate in it. I'm just sharing of what I have heard many people talk about. So there goes that. All right. So those are the components. So the retirement, because there's still a large population of baby boomers, they need a place to live. We all need a place to live. That's why I'm calling residential being probably the best real estate sort of type that you can invest in. Medical is good just because more hospitals will be needed. More those medical components will be needed and necessary, especially today as we're seeing it all over the place, need for hospitals and sort of medical units, okay? Location is going to play a big part as well. I was going to say price, but we're going to get to the price in a moment. So location is going to play, and what you want to look at is you want what is called a flat market, okay? So flat market is basically a market that is not highly cyclical. An example of highly cyclical market would be just about any major metropolis that you can think of. London, Dubai, New York, Paris, Seattle, San Francisco, LA, Hong Kong, right? If you can name it and you know roughly where the location is, it's probably highly cyclical. But real estate is very localized. It's all over the world. It's all over the place. So when you get out of those highly cyclical markets where the prices are so unsustainably high that no amount of rent can actually cover what your expenses are, and you get into properties that are reasonably priced, that a reasonable rent income can actually cover and pay for it, those are still good. Okay, which brings me down to the price. Paying attention to what you pay for your real estate is key to success. Just like any asset, it depends on what price you pay for it, of how well it performs. For some of the folks, if we were to take Dow for example, if you bought any of the stocks at the height of the market, which was mid-February of 2020, right? And then we are today here in, mid-March, second part of March of 2020. So in approximately a month, we've lost like 30, 40, 50, 60, 80%, depending on what you bought, of what sort of industry or company you have purchased. That is a huge loss. If you have bought, that same company back in, I don't know, like 1985, then you're still okay, right? I mean, you've lost some of that accumulated paper wealth, right, of what it was reported on the statement to you, what you were able to see on the screen. But in real terms, so to speak, you haven't lost all that money. You're still positive. That's why price is incredibly important for any asset, and especially for real estate. Real estate is highly illiquid, meaning you can't quickly sell it, right? If I have a stock in, say, Netflix, for example, I mean, I can click a button and boom, I can sell it typically, unless they hold off the market or the app crashes like it has happened, or nobody wants to buy it. But typically speaking, it's much easier and quicker to sell something like that than it would be a house, right? A house, even in the best of the times, in a normal period, can take a few weeks to a few months, right? Like that's normal. That's why it's called highly illiquid. However, that's why the price kind of pays attention. But however, if you buy income producing and you buy at a reasonable price, at an affordable price, that's what it would perform really well. Okay. There's another thing when we talk about the type of real estate, that you're going to have these sort of, it sort of divides by the classes, and perhaps I should add that in. Okay. So you want to do a class. Okay. So property divides, residential property especially divides into particular classes, or kind of like levels. And a class, it's sort of like A, B, C, D. You might have heard of it if you have been paying attention or watching any of the other channels or listening to some podcasts or whatever. But the class is sort of, the A class is going to be a brand new build, something that was just built in the downtown area. It demands the highest price, it gives the lowest returns, and it demands highest rents, or at least it did up until the crash. The D is going to be severely, in probably worse parts of the town, worse locations, probably, not a very good quality of tenants. Some may pay, some may not. So that one is very questionable. And then you have this like B and C category that are kind of like in the middle. And so the from A to D, it's kind of like grades in school if you think about it. So A is going to be the costliest and provide the least amount of return. D is going to be the cheapest, and on paper at least, it's going to provide the highest potential return. However, because of the type of tenants you might attract in that a particular location, or not attract at all, it actually could be the worst. It's not necessarily recommended. So probably the best classes that are going to perform typically during any cycle whatsoever, but particularly in the down cycle, are going to be B and C properties. So you want to look for affordable places that you can purchase, affordable places that you can rent for, and above all, you want to make sure that you are what is called cash positive from the day that you buy. If you have been paying attention to anything that I have been sharing or teaching whatsoever, you will understand that that's not something that is brand new. That's something that I have been talking about for forever. A lot of times, you might hear people saying like, oh, don't worry about it. Like eventually we'll make cash. Well, what if that eventually never comes? And now I'm actually, really deeply concerned for a lot of people. But when we talk about sort of the people who own real estate, I'm not as worried about people who own 10,000 units or 500,000 units or whatever, right? Because they're probably diversified all over the place, all over the different classes, so they'll do fine. Who I am concerned about is the individual investors like you and I, who might have gone out, purchased something on this promise that it will go up, and now we're hitting this sort of halt, and chances are those won't do well at all. Again, I don't know, I don't have a crystal ball, and I have no clue what the future is going to bring, but I'm just looking at historically what has transpired, and that what leads me to start having some understanding of what most likely scenario is. All right, so that's kind of where I'm thinking that some of the things that might benefit you. It's definitely something that I am deeply involved in, and that I am paying attention to, and that's kind of how I have been investing ever since the last crash. And if you're right now in a paper market and you're watching your wealth dwindling, it's heartbreaking, and I understand it. It's very stressful. It's very uncertain. Most of us are probably very stressed and feeling very uncertain due to many different things. But I was in paper assets in 2008, lost everything, and I use that as a rather very expensive education, but an educational moment to help me start getting into learning some of these things, reading a lot of books. And, if I can give you the best advice of what would make sense to do is, get out there and start learning. Spend time that you no longer have to spend commuting or can't spend running around and doing all kinds of different things that otherwise you would. Get some books. A lot of the libraries are offering stuff for free that you can get on a download. There's plenty of videos that you can watch. I recommend watching many opposing views and opinions, because what it will do, it will help you create your own view and opinion. So that way you're not following somebody, but you are creating your own opinion of what you think makes the most sense. If you're interested in getting any of my stuff, of course, there is plenty of videos on the channel, so make sure you subscribe, make sure you check them out. I will do my best to kind of keep up with putting these things out. I have a few different businesses and things that I'm doing, so I'm not always able to sort of consistently, pump out 10, 20 videos, as many as I would want to on every given day. But I will continue to do my best to do these ongoing educational moments as we're progressing through this crisis, as we start kind of going up. So you definitely want to subscribe. It's absolutely free. And I am very much committed to keeping the channel ad-free. Nothing drives me nuttier than when I want to watch a content and then you have an ad like inserted right in an inappropriate time. And so I don't want to do that for you or for myself, because I figure if I don't like it, you probably don't like it. So I don't want to do any ads whatsoever. And that's kind of what my commitment is to you and myself, that the channel will remain ad-free. And so there you go. If you're looking for a channel that talks about wealth and money and that kind of stuff that is ad-free, I invite you to subscribe. Make sure you share it with people whom you think this could be beneficial, because it does help me spread the news, spread the word, spread the message, help as many people as we possibly can to sort of preserve whatever wealth we have left over and position ourselves in a way that we could thrive. Because what I think is coming, and I'll do some videos on that, is going to be an opportunity of a lifetime to be able to buy all kinds of things at a super deep discount. And that's kind of what I want to do for myself and what I want to do for you, if you will sort of follow me along and if you will sort of take me on with you in your lives. If you're looking for any sort of educational materials, you're not quite sure where to start, there's plenty of things out there. I am also gifting. I'm not selling. There's stuff on Amazon, but I don't want you to spend the money, so it's on Amazon because I put it on Amazon when it got published. But I am gifting all of my different books and downloads and stuff. So, if you're interested, there are links below where you can go in and grab what I call virus-free products. And I call them virus-free because it's not a physical. I'm not going to ship anything to you, so you don't have to worry about like touching, cleaning. Like, how do you clean a book? Like, do you like Lysol it? Like, how do you do that? It's a download. It's absolutely free, and the links are below. Until next time, stay forever money blessed, and remember, you are only one deal away.